Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
Slight bounce today in the markets. Let's take a look at Bitcoin. The CoinDesk Bitcoin Price XBX Index currently trading at $37,343. Bitcoin slightly up almost 2% over the past 24 hours. The CoinDesk Ether Price ETX Index at 2765 ETH, making an advance of about 6.4% over the past 24 hours. And the DFX, CoinDesk's DeFi Index right now, 296 DeFi, also making gains about 3.5% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So what could be moving markets right now? We've got a jobs report out, but we also have the Beijing Winter Olympics that everyone has their eyes on. They've officially kicked off. The opening ceremony is happening as we speak. Xi Jinping and Vladimir Putin have met in what's being billed as the China and Russia summit. Emily, a lot of dynamics and geopolitical chess bearing going on.
Yeah, I mean, this is super interesting, especially if you compare it to 2008, the last time China hosted the Olympics. We are in a radically different world on so many different levels. The U.S. is a diplomatic boycott. So does a lot of U.S. allies. As you said, Vladimir Putin is kind of at center stage along with Xi Jinping. So the geopolitical changes are on full display. Then you also have the pandemic. You have a basically empty arena, or relatively empty by Olympic standards. You also have a more pragmatic China. In 2008, China spent, I think, about $40 billion on the Olympics. This year, they've budgeted about $1.9 billion. So that's also like a very different attitude. So there's just so much going on here. And yeah, it's worth watching for that reason alone.
Yeah, and in terms of the jobs report, it was expected to be pretty bad, but everyone was pretty shocked that there were actually some gains, Lawrence. Is that what's propping up the market?
Well, what was interesting was that right before, about 15 minutes before the jobs report came out, Bitcoin, for instance, spiked up a little bit, and now once it came out, it started to fall. And part of that, I mean, look, I've said this, until I'm blue in the face. I'm not sold on the idea that there are macroeconomic factors that necessarily affect Bitcoin price. I think there are other factors that are involved, obviously. But we had the 10-year yield go up to 1.9%. After the jobs report came out, is this fear of, oh boy, you have a heated economy. I guess this means that the Fed's just going to keep going through with its plan to raise rates and to lessen the balance sheet that it has on its books. So that might have had some play in the past hour or so. The 3% that were up over the past 24 hours is, look, it's a lot of factors, I think, happening there that are not related to macro, as I said. But I think we're going to start to see a little bit of markets,
if you will,
natural ebb and flow, and then we could see some things like Facebook's earnings numbers playing into it somehow. Some worry about what the metaverse really means in the markets. That might have a long-term impact compared to just what we're seeing now.
Well, innovations in decentralized finance, NFTs, and DAOs have largely been confined to smart contract platforms like Ethereum. But let's take a look at our next guest who wants to bring that innovation to Bitcoin. Muneeb Ali, he's a contributor to the Stacks protocol. He's raised $150 million to build New York-based Trust Machines, which aims to build Web3 applications on Bitcoin. Joining us now there is Muneeb Ali, CEO of Trust Machines. Welcome, Muneeb.
Thanks for having me.
Great. Well, the narrative around Bitcoin is that it's a store of value. You buy and hold it, but you want to do more with it. How are you going to make it Web3 compatible with DeFi, NFTs, DAOs? How are you going to make that work on Bitcoin?
Yeah, I do think that this is like a big topic of discussion in the industry, that a lot of people look at Bitcoin as a very simple protocol, and it is just meant to be sound money. Right. And then if you want to have smart contracts, if you want to have like these new types of applications, then you have platforms like Ethereum or some of the newer blockchains out there now, like Solana and Avalanche. Interestingly, I think if you look at Bitcoin from a technical perspective, there's nothing really stopping you from adding a separate programming layer on top of Bitcoin that actually brings the smart contract functionality to Bitcoin directly. This is the work that we did with the Stacks project that went live January of last year and has actually seen tremendous traction over the last 1 year, where people are building all sorts of Bitcoin DeFi applications. They're building Bitcoin NFTs and so on. So what we have basically seen is that I divide like the steps into three. The number one step is the digital gold narrative, that Bitcoin is a store of value. And we are seeing that play out. Like, institutional investors are adopting it, even nation states are adopting it. The next step is going to be turning Bitcoin into a productive asset, right? So right now, most of the Bitcoin actually sits passively, like more than 99% of Bitcoin sits passively, and you can start deploying it actively into smart contracts, like how we've seen on Ethereum, where between 20 to 25% of the capital is actively deployed. People can get yields on it. And I think that's a massive opportunity, right? That Bitcoin, even with the markets coming down, Bitcoin is still like a $800, $900 billion capital base, which is basically right now being underutilized. And just making it productive through smart contracts is a massive opportunity. And then step three is what you brought up. The Bitcoin is not just kind of like sound money. The infrastructure of Bitcoin, the decentralized secure layer that's already out there, can actually serve as a settlement layer for Web3 applications, because it's all about trust. It's all about decentralization. And there's no other blockchain that even comes close to the level of decentralization that Bitcoin has. So we can add the missing features as separate layers on top, and then use Bitcoin as the final settlement layer for Web3 applications. And I think that's going to be a major, major unlock.
So, Muneeb, when we look at the current structure of the marketplace right now in DeFi, wrapped Bitcoin doesn't necessarily have as big of a market. It doesn't have a market share the size of, let's say, ETH when it comes to DeFi as collateral. It's as total locked. And how do you get the DeFi traders to pay more attention to Bitcoin, and vice versa? How do you get the Bitcoin maxis to pay more attention to DeFi? Well, there seems to be this cultural difference in mentalities for people who are involved in Bitcoin and people who are involved in DeFi. How do you bridge that?
Yeah, I think that's a great question. So the first thing about that people should understand about wrapped assets is that most of these wrapped assets introduce central points of failure, and those are big limitations, right? So let's look at a wrapped BTC on Ethereum. You're actually trusting a company in the middle that is issuing a new asset on a different blockchain. So what happens is that it puts a natural limit on how much of that capital can be deployed. Like maybe it's like 5 billion, 10 billion. But at some point, if the numbers start becoming really big, like 100 billion, 200 billion, like people would start feeling very uneasy about that single point of failure in the middle. And I think that's the fundamental thing that we are changing, and which we have seen to work really well on Ethereum, because Ethereum, when people are deploying ETH into smart contracts, there's no central company in the middle. Like I, as a user, could just use my wallet and deploy ETH directly into smart contracts. So once you bring that functionality to Bitcoin, where as a Bitcoiner, just using a Bitcoin wallet, you can do a normal transaction, and you're actually, let's say, putting up collateral for a stablecoin, and you're minting stablecoin against your BTC. So now there are no kind of like central points of failure in the middle, and that's where you really unlock the capital. So I think that's the first thing. The second thing about the cultural aspect, I do think that in the Bitcoin community, especially like after 2017, there is this culture of almost like rejecting new ideas, and I think there are good things to it and bad things to it. Like for example, Bitcoin does have a very high bar for quality in terms of any changes, any new things, any new code features that can be introduced to the Bitcoin code base. And I think that's actually a very, very important thing, and it's a very good thing to have. On the flip side, I think sometimes this culture also comes across as you're just going to reject new ideas. But I do think that a lot of that is changing. Like in my interactions, what I've seen is that some of the people who on the spectrum are more on the maximalist side, they might be the more loud voices, but they're actually the minority, right? Most people who actually own Bitcoin hold other assets as well. And in our community over the last 1 year, we've actually seen a massive increase in the number of people who are Bitcoiners, who are really excited about putting their Bitcoin capital to work, and they want to use decentralized applications that are built on top of Bitcoin.
So, Muneeb, just to kind of follow up on that point, it's funny because you're saying like there's so much opportunity here, and it's almost like such the obvious opportunity in the sense that Bitcoin is clearly the first mover in this space, and yet nobody's really doing this at scale except for you and your team, right? So, I guess the question is like why is that? Why has it taken so long for people to be like, oh yeah, DeFi is applicable to Bitcoin too, smart contracts are applicable to Bitcoin too? I mean, you sort of mentioned maybe part of it has to do with like resistance to change or having a higher standard. But what have been the main obstacles thus far in preventing people from seeing the same opportunity that you're seeing now?
I think the number one challenge has been technical reasons, right? So if you look at how Bitcoin is structured, Bitcoin does not have smart contracts at the base layer, right? Some Bitcoiners would try to argue with you that even the limited script that Bitcoin has, even those are smart contracts. But developers don't think of them as smart contracts at all, right? They're extremely limited. And some of the other solutions that we have seen over the last 10 years are also very, very limited type of smart contracts. So the biggest technical hurdle was how do you introduce fully expressive smart contracts, like the kind of programming languages that exist on Ethereum, on Solana, and other blockchains where developers can build whatever that they want to build. If you want to build a decentralized exchange, you should be able to do that, right? How do you introduce that type of expressive programming languages without modifying Bitcoin? And I think that was a very hard technical challenge. And that's the technical challenge that me and a bunch of computer scientists that I've worked with, they cracked over the last few years, where there's a new type of a consensus mechanism. It's very different from proof of stake and proof of work and other things that people have seen. It's basically cross-chain consensus. Right. So what it does is it adds a new programming layer to Bitcoin with requiring zero changes to Bitcoin. Like we do not require any changes to Bitcoin whatsoever. And it connects to Bitcoin. It has a cross-chain consensus with Bitcoin. And then the smart contracts can actually read all the information from normal Bitcoin transactions. They can respond to it and you can get smart contract functionality. So I would say the number one thing was the technical challenges that were there, which only got cracked like last year. And I completely agree with you that this is one of those things that in hindsight, it's going to look like the most obvious thing. Bitcoin is by far the biggest cryptocurrency, the biggest brand name, the biggest community. And I think it's going to look like, hey, obviously people were going to build interesting things on top of Bitcoin. Obviously they were going to build DeFi on top of Bitcoin. It's the best form of money.
So many 5 years from now, of course, we all wish we had a crystal ball, but and we might have long-term plans, but of course it ends up being short-term. But 5 years from now, if what you think will happen, we've seen the rise of these, we've seen the rise of the altcoins over the past year, the layer ones just explode over the past year. Do you think over the next couple of years, if not 5 years, that will continue? Do you think Bitcoin can reclaim, let's say, market share, if you will, from them? Or do you think it's going to be an ecosystem where Bitcoin will be not an also-ran, but just one among many?
Yeah, so I think the way I look at this is I've been a believer in a multi-chain world for smart contracts. And even if you go back like 9 months, there were a lot of kind of like theories and narratives in the industry that no, Ethereum is like so far ahead that other smart contract platforms are not going to take off. And we've clearly seen that being invalidated with the rise of Solana, with the rise of Avalanche and Algorand, other platforms out there. And they're seeing real traction, right? They're seeing real developers coming in. A lot of users are coming in and actually using these networks. So we have already seen that play out. The second thesis that I deeply believe in, maybe even more than a multi-chain world, is that Bitcoin is going to be the center of gravity for crypto. Because as soon as you can do the type of things you can do on Ethereum, like really easily on top of Bitcoin, like that is the biggest differentiator. Because why would a new developer go anywhere else when they already got introduced to crypto through Bitcoin? When on one side, you're seeing $1 trillion of capital on a secure base, and you can just start working on it straight away as easily as you could on a smaller ecosystem. So I do think that there would be network effects where Bitcoin would basically pull a lot of these use cases towards Bitcoin. And I think that's going to be very, very interesting. Obviously, this is a thesis that we very deeply believe in. We have seen enough data in the market over the last 1 year. And I think a lot of our investors agree with it. So one of the funds that invested in us is Breyer Capital, which is Jim Breyer, who actually led the first institutional round at Facebook. Right. So the type of people who kind of like were early believers in even things like Facebook believe in this Bitcoin thesis. Right. They're not saying that hey, smart contracts are going to be big. What they're saying is smart contracts on Bitcoin are going to be the thing that's going to be really big 5 to 10 years from now. And if you look at the data, like Ethereum is like roughly $500 billion of a network value, but there are $500 billion of application built on top. If you look at Bitcoin, like this is where this is such an obvious opportunity. It's $1 trillion of network value, but very little applications built on top. In the long run, I just don't see a world where it stays that way. I think there's going to be a ton of value created on top of Bitcoin.
So Muneeb, are you going to be building Web3 tools on Stacks? Okay, on Stacks versus Rootstock or RSK. And how is that different from your company Hero? Because Hero was also developing tools for on top of Stacks. And I guess another thing I wanted to talk about was, is there a white paper for Stacks that people kind of understand more about the technical aspects of it?
Yeah, so I think Stacks is a open source project. It's a decentralized programming layer for Bitcoin. So I think just like Bitcoin is decentralized, obviously nothing can be as decentralized as Bitcoin itself. But if you look at the Stacks project, it is very decentralized relative to other crypto projects out there. There's no single big company that is behind it. And sometimes that actually leads to confusion, interestingly, because people are so used to having a big company behind a project that they confuse the company with the project itself. So Hero is a developer tooling company. It's in the business of building really amazing developer tools for developers. And the new company that I've started, Trust Machines, is more focused on building applications and contributing to the underlying platform technologies. Right. So the way to think about this is Stacks is decentralized. It's a programming layer. It's an open source project. And now there are 30 plus other companies, Hero and Trust Machines being two of them, that are all kind of like contributing to this. And they want to make Web3 happen on top of Bitcoin.
All right. We got to wrap it there. But Muneeb, thank you so much for joining us and congratulations on this new company. That was Trust Machine CEO Muneeb Ali. Coming up, we've got former NBA All-Star Baron Davis joining us to talk NFTs. Stick around.
I was posting art on Twitter. I had a physical painting I did, and I made a little website. A few months passed, and I get an email. I love your art. I'm interested in digital assets. Do you know what NFTs are? And I read that, and I was like, what?
And trying to explain to people that we can have these collectible digital assets that you can own. And then the digital assets, like game assets, is also a growing sector.
Remember the ape thing? I was like, oh my God, I need to get in.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Former NBA basketball player turned venture capitalist and serial entrepreneur Baron Davis launching More Than Us, a venture studio that will develop and drop new NFT collections featuring underrepresented communities. Joining us now is Baron Davis. Hello there, Baron from the West Coast. Thanks for waking up bright and early for us. So you're a two-time NBA All-Star. Over your 14-year career, you've earned almost $150 million from the NBA. You're now an investor, serial entrepreneur. So what's your investment thesis?
My investment thesis is, when I started out doing this, I wanted to invest in people that, shared the same qualities, that looked like me, of course, that were hungry entrepreneurs. And I would go to conferences and I would just, not see a lot of, women, not see a lot of people of color. And the few that I did, I would just make sure that I went on my way especially as, a basketball player, to make sure I related to people. And so, through our work at Big Business Inside the Game, we've been traveling the country doing dinners, fireside chats, things like that, bringing about a community of people, to have discussions around entrepreneurship, about opportunity, giving people of color and women a real and a true seat at the table. And so that's just our investment thesis, right? Is look the part, be the part, and take action by putting our dollars where they're supposed to go.
Oh, Emily, you're on mute.
Sorry, I was on mute. Welcome. Great to have you on the show. So I was just wondering if we could just break this down a little bit more. This whole idea of, how like NFTs and crypto will help marginalized communities. Because you definitely hear that, right? That's one of the talking points that's very popular. Crypto is sort of this democratizing force of finance. But I just want to hear from you and your view, how exactly does that work, right? Because there's just also this counter argument that because crypto is so new and because it's so risky, it's actually for certain marginalized communities, they're actually a little bit more vulnerable, right? They might not have experience investing, they might not know about it, and they can lose a ton of money, right? So there's definitely people who say that. And then on the NFT side, as you see, a lot of the people now who are kind of blowing up in the NFT space are celebrities or people who have teams that are helping them mint NFTs. It's not quite as democratic as it looks on the surface. So I'd just like to hear your view of how it actually does help marginalized communities.
Well, if you think about it, if you look at the art world, you had to be extremely popular or you had to have a certain elite group of people and network just funding your projects, making your artwork valuable. When we talk to a lot of artists, a lot of the artists that we work with, they'll never have that opportunity, right? They'll never have an opportunity to be a celebrity. They'll never have an opportunity for distribution, but their projects are phenomenal. Their artwork is phenomenal. And so for us, it's looking at these NFTs could be, a receipt and a certificate, right, to community and to community building. And so we look at community first. We look at utility, right, but also thinking about, for instance, with More Than Us, our venture studio. It's really put our money and then put our investments into building, units of people, collectives of talent that can champion other talent, right? And can have aligned values where, the NFT community can really start to be, think about it as its own sustaining ecosystem. And so for us, it's really putting our dollars into, the developers, putting our dollars into designers, but making sure that, the art, the utility, the music inside the NFT is, somebody on our team for More Than Us, comes from a place of, needing access, needing opportunity. And so we've been building our collective and our firm, just with that in mind. We have to have, women. We have to have people of color. We have to have people from all nationalities and backgrounds. Part of the stuff that we want to do is celebrate cultures and heritages, right? And so a lot of the light that has been shined on people in the NFT space has really been, the celebrities or things that have been, greatly venture backed. And so we wanted to, come into the business and really say, there are opportunities for us to raise communities in the smart contract, have payback, and write-in foundations into the smart contract, solve small community problems, solve national and global problems when we think about, how we can utilize these utilities to help, further advance, other people that are less fortunate.
Baron, first of all, thank you again for coming in so early in the morning. And do you yourself buy NFTs on the side? Have you been buying them prior to getting involved this way? And if so, what were you looking for? What are you looking for now? How do you approach that market? What do you look for in an NFT?
I think we look for, community, utility. Obviously, it's art. So really it's what we like, right? And who's behind it. We're one of the largest collectors of women NFTs, women-led, women-designed NFTs. We just really want to see like who's behind it, who are the people, how are they gathering, what are they talking about. We have a NFT called King Boo Boo, and they're all about mental health. They're all about cybersecurity. So for me, it was buying these NFTs, figuring out who's behind the scenes. What are these communities like? What are they doing? How are they representing people? And, one, how are they including culture? How are they including people of color? How are they including women? Who's in the group? Who's on the cap table? Those are the questions, that we're asking. And I think a lot of the companies that we're dealing with, when you start looking under the hood and you start asking those questions, right, you start seeing, where there are holes, and then where we can come in and fill those holes as well, with a lot of people in our community.
Baron, finally, can you just tell us a little bit about your first experience with crypto? How did you learn about it, and how did you first get involved?
I got involved. It was South by Southwest, and there was a bunch of kids just sitting at a table, having a good time, and they started telling me about Bitcoin, and they were like, "Hey, you should get into Bitcoin. You should get into crypto." And I was like, "How much?" I told them I didn't have too much money. But, leap of faith and blind faith. I had a friend there. So I just kind of made a blind faith investment. And I think from there, just being a gamer, having kids, I started to really understand, blockchain and crypto and gaming and NFTs through my kids, right? From them playing Roblox to all the games that they're playing, The Sims, the way that they play, the way they interact with their toys and, unboxing and things like that, the way that they're learning now, on new apps like Caribou and Hello Source, gave me an idea. It was like, we should be taking these, IP, into the NFT space to bring about learning, to bring about community. But also this is, a great opportunity for, new businesses. And new entrepreneurship. So ideas are welcome for us, for MTU. Designers are welcome. Developers are welcome. And we have our factory, and we make sure that everything has a process, has an order, and an execution date, and a distribution date when it comes to the NFT and the NFT projects that we'll be pursuing.
I'm just taking a look at some of your collections you're dropping. History of the Game, that's a virtual basketball Hall of Fame featuring even some talented players who didn't make the actual Hall of Fame. We've got Girl Get Your Bag featuring female leaders, and You Wish, which has a Black Santa and other diverse characters. So very interesting. Thank you, Baron, for joining us. We got to go, but that was two-time NBA All-Star turned VC and entrepreneur Baron Davis. Coming up, we'll have a crypto markets update with Aperture Investors and our global policy and regulation update with CoinDesk's managing editor, Nick Day. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, checking in on Bitcoin. The Bitcoin price XBX index currently at 37,935, a bit of a bounce, 3.5% over the past 24 hours. The CoinDesk Ether price ETX index at 2821, ETH soaring 8.5% for the day. And the DFX CoinDesk DeFi index at 296, DeFi making an advance about 3.5%. All right, joining us now to discuss the crypto markets is Peter Marber, head of emerging markets at active asset manager Aperture Investors. Welcome, Peter. Thanks for joining us. So just want to get your quick take on what is this crypto market bounce we're seeing in the short term right now?
Well, it's been sort of oversold, and there's been a bounce in the tech space as well. I think you mentioned it in some of your earlier sets. So we're getting some follow through there, and maybe also, some of the people who are looking at rising interest rates and inflation are also sort of maybe jumping in the bandwagon.
So, Professor Marber, as I used to know you as, the El Salvador bonds, that's of course come up as a point of interest for people in crypto because obviously El Salvador is issuing all these bonds that are based on its potential for developing a Bitcoin city. But what was El Salvador like before it got involved in Bitcoin? What was its debt situation like? And why do you think President Bukele kind of made this overture into Bitcoin and into changing the legal tender and adding Bitcoin to its legal tender? What do you think was really behind it from a non-tech perspective? People in the crypto industry always say, well, it's because he sees the future. But what was the fundamental thing behind it?
Well, I think there are certain structural features that we have in emerging markets that actually lend itself to crypto and make crypto attractive. So just remember, in emerging markets, we've got a very large unbanked informal population. We have maybe 1.5 to 2 billion adults around the world who don't actually have bank accounts. They're not part of that system. The International Labor Organization says that about 1 out of every 3 workers in emerging markets is in informal labor. That is, that they're probably being paid in cash. And so they have this large cash segment of these economies. And so a lot of them are heavily reliant on foreign remittances. That's family members who go abroad to, let's say, the US or Europe. They earn money there, and then they go to a money transfer operator and wire the money back home. And the problem is that that wiring, that transaction, is quite expensive. It's maybe up to 10%. So now if we want to go to a country like El Salvador, so it's about a $24 billion economy, quite small. Just keep in mind the US is over $22 trillion, almost 1,000 times bigger. And so what we have is a remittance of, I think it's about $6 billion in the case of El Salvador each year. So you have $6 billion, it's 25% of the country's economy. And to the extent that you can reduce the cost of transferring that money by 10%, that's a big deal. So if somebody's normally wiring $100 to El Salvador, the recipient might only walk away with $90. Not only that, it takes a couple of days for the paper to all be processed. But imagine if you can send $100 equivalent instantaneously. So believe it or not, for El Salvador, adopting crypto or allowing crypto into the system, you get an immediate boost to the GDP of 2.5% if you're assuming a 10% transaction cost. So I think that's part of the big attraction here.
But what does it do actually for their debt situation? Obviously they have dollar-denominated bonds, and now they're getting involved in a volatile asset, so to speak, with the country using its reserves to buy Bitcoin and it's volatile. Does it make El Salvador a riskier bet? And also too, what do you think of the IMF's criticisms of El Salvador getting involved now?
Yeah, well, that I really have spent a lifetime, it feels like, trading sovereign debt. And I think in the case of El Salvador, I mean, it's really unfortunate. I mean, the country really is economically challenged. It's been so for a few years. There's huge unemployment. There's also some social unrest, some gang violence. And you're talking about bonds that have a 1-year maturity now that are trading around 80 cents on the dollar. This is a country that a few years ago was able to borrow in the marketplace at less than 4% risk premium above U.S. Treasuries. Today, we're now at 1,800 basis points, 18% above the U.S. rate. And so clearly the world in general is quite concerned about the economic situation in El Salvador. And I think it's only gotten worse, believe it or not, since the crypto announcement. And yes, you're right. The IMF and World Bank are very, very concerned about El Salvador suddenly, trying to craft an economy around a single crypto like Bitcoin because of the fluctuating value. And that's, I think,
do you think it was a bad idea?
I think that there might have been more traditional ways to kind of stabilize the economy, and I'm not sure this actually has stabilized the economy. And keep in mind that normally wire transfers, when you wire $1, it's still worth $1, when you get there. But imagine if folks had done this with Bitcoin last year. We know from, let's say, April to July, what Bitcoin had a 50% drawdown. And probably has had a 40% drawdown since November. I mean, this is quite volatile if we're thinking about a substitute for money, right? If it's a speculative asset, it's different. But we're talking about here using crypto as some kind of payment, some kind of basis for transacting within the economy. And there you really do need more of a stable coin. So it's surprising that they did really jump on the Bitcoin bandwagon.
Would they have been better going off to using gold as a reserve asset?
Well, some countries tried to do that and borrow off of gold. If you remember, Venezuela didn't help them too much either. And I think that's something also to keep in mind. One of the other reasons that crypto is kind of attractive to emerging markets, and think about some of the biggest kind of users in crypto around the world include, I think the 5 leading countries are actually all in emerging markets. It's Nigeria, Vietnam, Philippines, Turkey, Peru, all places where people have some questions about the government. And so what you have here is, questions of trust, particularly in a place like El Salvador. Remember that in an emerging market context, we don't always see the most sound economic policy. And as a result, people's money can actually get confiscated in a couple of ways. They can physically confiscate it, like you could have your bank accounts frozen, capital controls can be enacted. But the other way governments actually confiscate your money and erode value is through hyperinflation. So we only have to look at a place like Venezuela, which I think at peak had 1 million% inflation rate a couple of years back. People forget about Zimbabwe, also similar amounts of inflation that just literally wipes away the value of your money. And so if populations are uncomfortable or have distrust, you can imagine that's why they're going to adopt crypto. Even with the potential of maybe losing 30 or 40% of the money, in a short period of time. It just shows you how desperate some populations might be.
Some food for thought there. Professor Marber, thank you so much for joining us. Appreciate your insights. That was Aperture Investors Head of Emerging Markets, Peter Marber. All right, time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So we spoke about previously, Diem is dead, but lawmakers still want to talk about stablecoins, don't they?
Morning, yeah. So we're gearing up to head into not one, but 2 different hearings on stablecoins. Next week, the House Financial Services Committee is going to hold a hearing on stablecoins on Tuesday. And the week after, the Senate Banking Committee is going to hold their own version of that hearing. Both of these hearings are inspired by the President's Working Group on Financial Markets report on stablecoins, which came out last November. So they'll be discussing the recommendations. The first hearing next week, we'll be talking to Nellie Liang, Undersecretary for Domestic Finance at the Treasury Department. So she's one of the individuals who worked on this report, and I imagine they're just going to be, trying to get some further details on what the recommendations are, how to implement them, and what the key risks that the report seeks to address are.
Nick, I guess we saw some papers floating around that are going to be presented at the hearings. What do they tell us about where this is going?
So there is a draft discussion bill floating around circulated by Representative Josh Gottheimer of New Jersey. However, my understanding is that this isn't a formal committee document yet. This is just a representative kind of, trying to figure out what his interpretation of the report is and what the recommendations might look like if in, a legal form. So this isn't going to be discussed heavily at the hearing, I don't think. It's just kind of, right now just a single lawmaker. It does seem that there is support from other lawmakers for this, so it's very possible we'll see this adopted and possibly introduced later down the line. But, the bill circulating right now, if enacted, would require stablecoin issuers to be either, banks, of course, or, non-bank entities that are, they have, 100% collateral. They are keeping their reserves in insured depository institutions. They have, obviously they cover from the insurance side of it, but also that, they're invested in US dollars, securities issued by the federal government, or, possibly anything that the Treasury Secretary allows as a reserve asset. So, you can't just, put your reserves in a basket of assets or whatever. There's some pretty stringent restrictions on what a stablecoin issuer can or cannot do.
Mm-hmm. All right, Nick, thanks for the update. Have yourself a great weekend. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Time to check in with Crypto Twitter. And speaking of stablecoins, Circle CEO Jeremy Allaire is on it, tweeting with central bank digital currency white papers dropping left and right. More hearings on Capitol Hill next week on how to regulate stablecoin issuers, and China launching the ECNY as we speak. There is a deep sense of urgency on this issue. Circle, of course, running full-page ads with several media companies making the case for how the U.S. can win the digital currency space race. We'll see. All right, that's it for First Mover. Thank you, Emily Parker. Yeah. Thank you, Lawrence Lewitton. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You guys have yourself a great weekend. You're watching CoinDesk TV.